All right, good morning, everybody. As we usually do, we want to start with a focus towards what happened in the overnight hours around the world. There's different resources for this. I tend to use Finance Juice. I do have an account, but it's a free account. You don't need to pay to have an account here. Just by having the free account, you can use the filter and kind of weed out some of the news sources. So, you don't have to do that. You could just scroll through the different news that pops up, but I want to see when this thing moves that there was actually something worth reading. I have it on my screen at all times through the day, so when it moves, I want to know that there was actually something there, not just some fluff junk. So I made an account so that I can use the filter. I really recommend using that filter. You'll get rid of a lot of the extra pieces, and then what you have left is more actionable. This is a good resource to see who's going to be on the docket speaking today, what time they may be speaking, any additional auctions. It also tends to have this spot where it shows like a market wrap. They do it for our market, for the Asian market, for the German market. It gives you an idea of what happened in the overnight hours in Asia or through the trading day because Asia's closed. What's happening right now in Europe because it's around lunchtime in Europe. So it can really give you that heads up. Plus, at the end of our trading day, it does a market wrap and it can help you try to figure out what the heck happened in the middle of a trading day. Say price just makes a big move and you couldn't really find any news attached to why the big move happened. You can circle back, look at the end of day market wrap. Maybe they'll have it in there. Like I said, this isn't the only place. You can go to Bloomberg and get 5 things you need to know. It's free. They'll email it to you every day. Most of the time, you're not going to find something drastic or extreme. And that's kind of what we're looking for. The analogy or the example that I like to give is when that ship got stuck in the canal. That really affected the global marketplace. And obviously, we don't have an event like that all the time, right? So most of the time, you're not going to see some big event. And that's fine, right? It's not, who would want that every day? So don't try to invent anything. You come in, you look around, you don't see any really big situations kicking off. Look at see who's on the docket for the day to be talking and when the economic events are scheduled. I tend to check economics in more than one spot. This is the Thinkorswim. We're using MarketWatch. Go to the calendar tab. This list here sometimes can be different than the list you found on Finance Juice, maybe different than what you would find on FX Street. It's a good idea to look around because one source may not have everything that you're looking for. There are a lot of economic events every single day. Most of them you don't even hear about. When they set interest rates or they put out grain shipment weights, just really odd or down into the weeds minutia kind of data points. So take a look at more than one source when it comes to what's on the docket for the day. The big stuff like PPI, CPI, they're going to show up no matter where you're looking, right? Because it's the big stuff. These additional auctions, I find them to be really important, but they don't show up everywhere when you're looking around at the economics on the day. We do have those additional auctions, 11, 11:30, and 1 o'clock, which means we're not expecting much of a lunch today. We're going to be looking for these additional auctions to either validate a continuation of the trend that we're in for the intraday or flip us over and run us back in the other direction. I would say we're running back in a more normalized volume for this time of day. You can see we're sitting at about a 95, 96. Somewhere right around in there. So we were running with a pretty light volume in the last few days. It was kind of like a hurry up and waiting for those numbers to come out. But now that they're out, we're game on. And it's worth kind of stepping back a little bit, looking at the big picture. We have the year-to-date anchored VWAP. We managed to close above that yesterday, continuing to advance this morning outside of the weekly expected move. So we're looking at a topside breakout there. It makes sense. Last week we maintained inside the box, huddled up, building a lot of energy, and now we're blowing that energy, using it up, right? When being able to ask, well, have we moved too far, too fast? The year-to-date average for how far away from the 10-period moving average we are. We start to max out at around 3.5. We're only at a 2. So we've got some room before we consider that we've moved too far away from that 10. So in the current leg, there's still a little bit of room left, but we will be expecting another pause, right? That's what markets do. They pause, consolidate, and then they expand into a new leg, pause, consolidate, expand into a new leg. So the expectation is that we've got another 1.5%, 1.5% before we start to top out. And then whether or not we're going to keep above that year-to-date VWAP, which is one of the considerations for a, quote, healthy market, right? So for today, we want to get that continuation of yesterday. We had a nice pause in the overnight hours, didn't dump down, which is a good start. We're still maintaining around that VWAP, having not made an extreme move in the overnight hours. It's important. When we first made that big move yesterday, there was a lot of questions about will we reciprocate the way that we did after the job numbers from last Friday. We had that hard move to the downside, and then we spent the rest of the morning reciprocating back. Well, after that big move that we had yesterday, there was a lot of discussion of, are we going to reciprocate back? Are we going to go back towards where the explosion happened? And we didn't. We managed to maintain through the day, not really advancing anywhere, but not giving any of it back, right? That was a lot of what yesterday's trading was just maintaining the range, keeping what we took. So in the overnight hours, there was the same question, are we going to be able to keep it? Are we going to be able to maintain it? And we were, right? So we've been kind of holding around the VWAP, and we are up on the day about nearly 0.5%. So this is considered good, clean, healthy price action. We're what they call it, like we're healing or repairing the chart after that big move from yesterday. That's the way that, say, Investors Business Daily would, that's the kind of language that they would use, that we're healing or repairing the chart after that big move broke everything. So for today, we want to focus on, are we done yet? There's only 3 things that a market can do. 1, we maintain inside of yesterday's range. 2, we break out above yesterday's range. 3, we break down below yesterday's range. Well, we're already outside of yesterday's range, so we have an inside day breakout. We've pulled back and tested that, which is a good way to validate or confirm that the breakout is going to stick. Very much like a Busby pattern. So the green line there at 42.13, we'll call it 42.11, the cog line. We broke through that, retested it like a Busby. Now we're coming back up. A Busby only owes us back to the top here. So once we get there, we'll be done with that Busby. A good, clean, bullish move after all the consolidation we've had. We should easily be able to attain our ADR. The ADR right now is 1.67%. It's a 70-point move. An ADR half would put us at 42.46, and a full ADR would put us at 42.81. Between where we are now and all of that, we would first need to get through our own Globex high. And one thing that I would recommend is to use the quant drawing tool, measure the range that we've had in the overnight hours today, and plot that out. You can see it gives us 100% of the move. Not exactly in the middle of these 2 ranges, but a good starting point, right? So this could be one of your minor targets. That'd be 42.58. 50% of the move lines us up with the 42.46. So it's nice when our technical analysis lines up with another tool or another bit of technical analysis. We get confluence. Another thing that you could look to do to put some pivot points up there would be to measure all of the move from low to high with your Fibonacci, right? So starting from the Globex this morning and the low of Friday of last week, all of that range combined, the 111 ties in right there at that 42.46. The 1236, which is generally what I tend to target, is almost directly in the middle of those 2 ADR lines. Like 50% of the ADR. Love it. That'd be 42.63. For a more immediate pivot point, the idea would be to use our own Globex from today, from the Globex high to the Globex low, snap your fibs, and that'll give you a more immediate trigger, and target. Just validating some of the lines. I would put that snap at 42.28. That way you're not leaning on that really big wick. From that point, what you're going to want to see is price reclaim 42.33 and then print opposite candle color or doji from that location. Then move your fibs up to that new level. What that would look like, we'll just go ahead and do it, would give you another pivot point at 42, call it 42.40. So as you can see, you're able to extrapolate to get ahead. We already know that if price reaches our target, that we're going to move the fib up to that location. Well, you can move the fib up to that location early, and just to be able to mark out your lines. Just like that, we've got some closer in targets that we can focus on. All right, so that's all for a bullish continuation this morning. But there's another scenario on the dock, and that would be that we go back inside of yesterday's price action. Right? If we are looking to maintain without really dumping, then we would expect to stay above the 38.2 retrace, but still inside of yesterday's price action. Right? That would maintain that bullish posture that we have without really dumping back out. Another way you could look at it is the daily pivot. We're in an MDP right now, missed daily pivot. So whether or not we continue to avoid it today or we come down and tag it, all of this is considered bullish though. Whether we advance more or we just maintain the range for the day, it's still going to be considered bullish. We're in an inside week breakout. We're in an inside day breakout. The market priced took about 25 points off of the anticipated Fed fund futures. And now that we've taken that off, that we unwound that, the market's going to need to find another reason to maintain this bullish posture. Right? And it's a little bit of what we're going to be looking for through the day today. Plenty of pivot points. If we do break down inside of yesterday's price action, we'll focus on the 23.6 retrace, the cash open of yesterday, the RTH high of Monday, and then it's a pretty wide open space daily pivot point, the previous week's high, 50% retrace, and that would get us through half of the ADR. A full ADR to the downside would be 41.40. And I think if we break below the previous week's high, it would be like dropping a brick in water, that we're very likely going to move right down to a full ADR if we begin breaking below last week's levels, which is not expected, right? There's nothing on the table that says we're going to make a move like that to the downside. Looking at the volume profile this morning, you can see it's very, very narrow. And that makes sense because we've been holding within a tight range for the last, say, 7 to 10 days, waiting on this economic report to come out. We finally got it. We're outside of the box. We are continuing to move farther away from the box. We've been spending a little bit of time at 42.20. We're starting to build up more volume at that level. But there's a very shallow area underneath us, right? Just like what I was talking about. So if we break below the high of Monday, we're very likely going to move very fast through that zone, or through that level, and be back inside of the volume profile because there's no volume to help us out. All right, so basically 4,200. We get below 4,200 and it's like a brick in water. Looking at the 5-day, 5-minute. You can see we really don't have anything to carry forward from the left. Normally it would be something like the point of control, value area high, value area low. Well, we've already touched them unless we wanted to mark the low, which really it's so far away there's no reason to even bring that one forward. All right, so gold is still maintaining the range. We did get that cross up back again above the 4. Gold is supposed to be a hedge against inflation, and if inflation is coming off the way that they say maybe we've reached peak inflation, which I don't believe even a little bit, but whatever. If we've reached peak inflation and are starting to come off of those extreme inflation levels, then we would expect that perhaps traders would be getting out of gold, no longer needing that hedge against inflation. But that's not exactly what we're seeing. Want to continue to keep our eye on this. We're back inside the range, inside of yesterday's price action. We basically just want to see it stick and hold the line. No big extreme moves like we had yesterday. Bitcoin up on the day, up over 4.5%. This puts us back above that 24.5 level. We use Bitcoin as a gauge of a risk-on sentiment, right? We know it's a very speculative product traded around the world. So when we see it bid up, we don't try to make comparisons or correlations or anything like that. We just look at it as, hey, the global marketplace is feeling like they want to take some risk on, and one way that they take that risk is by trading into Bitcoin. So it risk on, risk off gauge in its most basic level. Getting a little bit of a pop this morning in the bonds. We've got that inverse head and shoulders off of the 141 area. That would probably put us back above that 4-period daily moving average. We call that a surge line. We broke yesterday down through that level. But look at the scope and the pace of the move in the bonds yesterday and what we didn't get in the S&P and the NASDAQ. And that's one thing that really kind of shook everything up yesterday. We've seen some very extreme, very exaggerated moves in the bond, in the dollar, in oil. And we didn't see any of that through the trading day and especially into the later part of the day in the S&P and the NASDAQ. There was a lot of flow in those 3 products, but there was no follow through in the stock market. So that fits into the category of when what should happen doesn't. WWSHD or whatever that acronym is, right? Proceed with caution. Recognize that, hey, these things are not doing what they're supposed to do. One of the things we use when we recognize that is we reduce our position size, right? Maybe we don't use as many contracts, or we adjust our target profits and look to get out of a trade a little earlier than we normally would. Just recognizing that there's some really odd situations right now that don't make sense and that things aren't moving the way that they're supposed to. We're still getting that fade in the VIX. We are at levels that we have not seen for a long time. And I think that that's a little dangerous and a little misleading. Because a lot of people look at the VIX as a gauge for should I should I be holding a hedge? Should I be fearful of the market? And I say you should still have some fear of the market out there, right? But I've been calling bullish moves. You know, go back and look at the chat that we want to be long, right? We want to be long this market until probably early to mid-September when they start. They're going to be decreasing the balance sheet. Well, they already are, but they're going to be increasing the pace of that reduction of the balance sheet significantly in the first part of September. We'll also be getting close to the next rate hike. There'll be this public argument about, is it going to be a 75? Is it going to be a 50? Remember, the market just unwound 25 basis points. They were expecting 75. Now they're expecting that 50. If they decide that we're going to get that 75 after all, they're going to put it back in. Right now we're looking at a VIX grid from the 9-day VIX all the way out to a 1-year VIX. We've got the VIX futures, the volatility for bonds. We've got skew, and then we've got a bond market and the S&P market. And as you can see, even with the crazy exaggerated moves we have in the bonds yesterday, bond volatility is down significantly. Skew levels are up considerably. Now, for like the unnerd version, as clean as I could ever give it, in its most basic form, skew says people are trading puts. There you go. Right? Obviously, there's so much more to it than that. But in its most unnerd version possible, people are trading puts. There you go. In the S&P. Generally, the institutions stay on the sell side more than the buy side. So if we think that they are in there trading puts, our first assumption would be that they're selling puts, and that is considered bullish. Now, we don't have to assume. We really can go in and look at the flow, and we can see if they're buying or selling those puts. But that is what the elevated skew is indicative of. That's a big word early in the morning. Also, keep in mind that you can't buy the VIX. You can't own the VIX. You can't trade the VIX. You can trade VIX options, but VIX options really don't go to the VIX. They are based on the gauge of where the VIX futures are at. So look at the 1-year VIX. We're at a 27. Look at the VIX, which is 30 days out. We're at a 19. That's like a yield curve. 19 on the low side, 28 on the high side, and it would be this gentle curve from left to right. We're not in backwardation. We're not in an inverted curve. We go from 17 to 19 to 23 to 25, 28. Right? Just like that in a line. If you want to trade a farther out VIX, at the money is not at the money. At the money would be what VIX futures are you going to be in? If you are going to trade for October, say VIX options for October, you would want to go look at the October VIX futures and see where that is at the money. That way you would know where to trade your at the money for the VIX. And if I just confused you, well, there is a volatility school. It's at the Bullish Bears. It's in the Next Level library. The point is, we haven't seen a 17.6 in the 9-day VIX for a while. Here is the first of the year. If we think about the May 3 FOMC and the March 16 FOMC. So we've got one more pivot right around 15.5. When volatility is this cheap, it might be worth just going in and and buying some of it up, right? I heard this pattern yesterday called sellers shut off, and I had not heard that. Usually it's called like a 3-bar play or some other, but um, it was a phrase used by someone who's got these. They got these phrases in their pocket that they tend to pull out from time to time. Sellers shut off is what this was called. And I took a picture of it. If you look at it on the NDX or the NQ, there's a better picture. I put it in the chat. I think I accidentally posted it in the futures, but it would be all right. Right? So this sellers shut off. Well, we had a better version of it in the later part of July. That 3-bar fade, and then that one single buy candle that recaptured 3 days of selling, and then the breakout and the expansion. So this is not exactly as clean as the last one, but it's still same thing. Right? So that's a pattern you'd want to stick in your pocket, put in your arsenal for different candle patterns. There's so many candle patterns that the ones that we see a lot and the ones that have a nice follow through are the ones that we want to focus on. The idea, though, either way, is that we're going to continue to expect an expansion. The reason that I'm on the NY Fang daily, because I wanted to point out we're not outside of this range yet. So while the S&P and the NYSE and other indexes have already expanded beyond this level, the NASDAQ has not. And the monsters of tech have not. Well, we're going to look for that expansion today. If we're not going to be leaning into the monsters of tech, then we want to look at where the flows are going. This is when the other 90 names really start to become insightful or valuable, right? Because if the monsters of tech are the biggest names, the Big 10, and they normally dominate the market, well, when the Big 10 call timeout and go sit on the bench, the other 90 is going to be carrying the load. So we really want to adjust our scanners or our settings or our parameters to not focus on the Big 10 too much, right? And that instead, we would want to look at the other names. Amazon, for an example, did not break above that pivot. That'd be one of our monsters of tech, right? Google still sitting inside of this range that it's been in since May. Facebook has a completely different chart than all of its peers, looking at the other monsters of tech. This one is a part of the beatdown crowd. And right now, for shorts that are getting covered, well, that fits. Right? Think of all the shorts that ran this thing to the downside, and now those shorts are covering. It's performance chasing and shorts covering. That's part of this rally that we're seeing. So when you're looking at the names, Think about the ones that have been beaten down significantly. PayPal, Meta, maybe Baidu, and the other B one, Baba, Baidu and Baba. So Facebook, really nice TRB, and it managed to close outside of that wick range from 177.5. We're going to be looking for a continuation in this and a start in a lot of those other names. Pepsi, TRB, it held. It held, but it was a pretty sorry TRB. Right? I would have expected more out of it, but just the fact that it held was impressive. So it's a TRB and IX10. We want to see if it can get up to that 177 level or above. Microsoft, massive gap. Now, Microsoft's been lagging for a long time compared to, say, Apple. And if you look at relative strength between Apple and Amazon and Microsoft and all the names out there, Microsoft's been turning around in the last few days. Been really bringing in the flows. So we've got a significant level of resistance in Microsoft right now, but if we can get through that resistance, I'd be looking to close that gap and maybe touch the 300 line. Tesla, it's more about what's not on the chart right now when it comes to Tesla. Elon's still selling a lot of shares. He's got that Twitter fight. He may have to come out of pocket way more than he wanted to. And, so there's a lot of extraneous information right now moving the Tesla charts way beyond what we could glean from doing technical analysis. Comcast, with Disney doing so good this morning, I would expect to see some kind of bleed over into Comcast, and so far we haven't, not yet this morning. We are priming up for a TRB. If we get that, then 40 is going to be a good target to the upside. Texas Instruments, again, it didn't even manage to keep up with the rest of the market, right? The rest of the market's already above that pivot. Cisco Systems finally started the break out of this range. Finally. If we catch the wick, oh, it's still not out. Still not out. All right, keep it on your list, right? There is the expectation of a lot of liquidity at this level. So until it actually gets through that level, we don't know that it's going to be able to manage that liquidity, right? So it's got to start the move through the gap before we start to focus on trading the gap close. Same thing with Netflix. We were talking about beat down names in the market. This would be one of those beat down names. That was a huge move in Apple yesterday. So Apple and Meta really had a nice follow through, but it's the concerning things like Google, Amazon, Nvidia. So watch the flows in the rest of the market. It doesn't hurt to keep your eye on the NY Fang, obviously, but expect that those other 80 or other 90 names can actually come into play. It's my day to stream. I'll be streaming in the futures. Probably start around 9:15 or so. And I'll see you all there.